record. Good. So let's begin today's class. So at least we can be able to do something substantial. So today I'm going to introduce to you support and resistance and how we draw the lines. So let me share my screen a bit. A minute. So I'm first going to introduce you the three analyses we use. Then at least we can start on technical or SNR. So give me a minute. So share. How do you share my screen? Yeah, here. Share. Okay, I think we are ready. So I hope I'm visible. If I'm not, you can let me know. So we begin. Okay, so let's begin on analysis. We usually have three types of analysis in the Forex market. So let me open. So then today we have big news. So I told you we'll be looking much on the Euro USD. So I'll go to the chart later. Let me just first introduce the three analysis. I hope you've been following. Last time I think we did about margin and I did a video. So hope you guys have been practicing from home. So my net is a bit shaky. Give me a few minutes so that we open. So we did margin, explained how margin works in an account and all. So now I want us to go to the real thing, the charts, so that we don't stay much there. So you can always raise your hand or ask a question. What's happening? Oh yeah, we are on. So a minute, guys. So here we are. So let's get started. So are you going to take the red or the green pill? Forget everything anyway. So anyway, let's get started. So the learning never stops in the markets. I can see a question. Video is lagging. Okay, internet. Slow, but so let's continue. So we have three types of analysis. We have technical, fundamental, and sentiment. So these are the three analyses. So I'll be helping you guys say within the next 45 minutes to really understand the three analyses we use. So let's start with the first one. So they look like a legged stool, market analysis. We have our technical, fundamental, and our sentiment here. So it's a kind of a standing three-legged stool. So what is technical? Let's begin with the first. So this basically represents the three different types of thought process. So analysis is more like a thought process. Let me give an example. Every day you wake up, what's the probability it's going to rain? Or what's the probability it's not going to rain? So when you come to the markets, we are always thinking in terms of probabilities. So let's begin with the first one. So the first one is technical analysis. It's not very hard. It's technical, just as the word is able to describe, it's technical. So a minute. My internet is a bit slow, guys, but I'm working on it. I think it's the weather. but it's fine. So on technical analysis, what are we looking at? Let's see what we are looking at. Minutes. So technical analysis is more of technical. Just as the word says, this, whatever chart you're seeing here, this is more of technical analysis. So, minute, guys. Minute, guys. Sorry, my internet is very, very slow today. Oh, yeah, we are here. So it's a framework in which traders study price movement. Introduction. So this technical analysis. So the theory is that a person can look at historical price movements and determine the current trading conditions and potential price movement. So someone who uses technical analysis is called a technical analyst. Traders who use this analysis, they are known as technical traders. The evidence is for using technical analysis that theoretically all current market information, Nyabuto, welcome, all current market information is reflected in the price. And technically, traders ascribe the belief it's all in the charts. So if price reflects all the information that is out there, then price action is all one would really need to make a trade. And technical analysis looks at the rhythm, flow, and trends in price action. So we are looking at the rhythm. The rhythm is basically how the market is working. Is it going up or is it going down? So that's the rhythm. The flow is how the market is feeling. Is it volatile? Is it not volatile? Like basically how the price going. Then on price action, we are basically studying the price. So kindly mute Elvis, welcome. So we are looking, sorry. So let's continue. So I was saying it looks at the rhythm, flow, and trends in price action. So now you have had the old adage that says history tends to repeat itself. So basically what we are trying to say, we are trying to study the rhythm. First of all, the flow. How is the market moving? Is it going up or is it going down? And then we are looking at the trend in price action. Price action is basically studying how the price is moving. Let me show you what price action is on my chart here. So this is price action. This price, can you see, guys? This price here. This is the price action I'm talking about. This on Euro USD. So sorry, guys. So this is the price action. As you can see, 1.2043. So now me is us understanding when this price is going up or down. That's what we are calling price action. So minute, guys. There. Let's continue. So minute. So it's all about prediction or probability. As I've told you guys, when you wake up, what would you say about the weather? How would you dress? Is it going to be sunny or is it going to be hot or cold? So that is so if a certain price held a major support or resistance level, mostly traders are looking to keep an eye out for it and base their trades around the historical price level. So let me give you an example. This is a good example. So look at this here. This becomes our chart. So it's the study of historical price action in order to identify patterns and determine probabilities.
Starting out with any new project management software.
Sorry guys, a minute.
Usually feel something like this. Where do you even start? Well,
sorry.
You probably got some to-dos written down somewhere, right? What?
Okay, let's continue. Yeah, so we're at the chart. So this is the chart I wanted to show you guys. So I hope you're following. Minute, my internet is really slow today. Yeah, so this was the chart I was telling you about. It's a study of historical price action to identify patterns and determine probabilities of future direction of price. So this is it. So you can see here, the red line here represents our resistance, and the red down here represents our support. So you can see the market was going up, almost touched the line, came back down again, went up, actually touched the now our resistance up here, went down. There was a lot of movement. I mean, there was a lot of consolidation around this area. Market went down, moved up again, then went down. Then it reached a point whereby it couldn't go down again, came back. So you can see the price that's been trying to be retested is this price. So you can see a retouch. A retouch is the market moves up, comes down, moves up again, then comes down, moves up, down, moves up, down, moves up, down. So basically, this is what I'm talking about. So this line here becomes my main level of resistance up here. Then this line down here becomes my main level of support. So I hope guys you're following. So in the world of trading, when someone says technical analysis, the first thing is that what comes to my mind is the chart. So what we are doing, analysts use charts because they are the easiest way to visualize historical data. And technical analysts live, eat, and breathe charts, why they are called chartists. So you can look at past data to help you spot trends and patterns. So what's more is that with all the traders who rely on technical analysis out there, these price patterns and indicators tend to become a self-fulfilling prophecy. So more and more traders will look for certain price levels and charts, the more likely that these patterns will manifest themselves in the market. So you should know that technical analysis is subjective. So you might be looking at this and someone else is looking at this. They are usually not the same. So for me, the idea is as long as you are able to come up with a good analysis depending with yourself. So the important thing is that you understand the concept under technical analysis so you won't get nosebleed. So we'll be talking about things like Fibonacci, Bollinger Bands, or even the pivot points. So all you need you to understand is that technical analysis is more about probability, not prediction. So all we need to understand is where will the markets go in the next 5 minutes, in the next 1 hour, 1 day, 1 week, and so forth and so forth. So that's what technical analysis is all about. So let's go now to fundamental. What is fundamental analysis? So what about fundamental? So fundamental, now we are looking at the whole economy. So like our economy, Kenya here, how is it performing? Now vaccinations are up, jobs are trying to reopen back. So all we are looking at is basically where is the economy going. So we usually have economic reports like employment reports. Tomorrow we have a big day. So if you have funded live by today and tomorrow, you at least will make 100 and something pips. I've already seen a big move on most of the majors. They have a signal on the AUD, Audi USD, we have New Zealand and Euro USD. So, but I'm going to show you that. So let's first go through what is fundamental. So what technical analysis involves poring over charts to identify patterns or trends. Fundamental involves poring over economic data reports. So all we are looking at in fundamental analysis is the economic data reports and news headlines. So, and even random tweets from a certain world leader before he was banned. So you remember Trump was always tweeting and the market is everywhere. Anyway, fundamental analysis, we usually look at a way of looking at Forex market by analyzing economic, social, and political forces. So we are looking at economic, social, and political forces that may affect the currency prices. If you think about it, this makes a whole lot of sense. So just like, economics 101, supply and demand will determine where price will go. In this case, is our currency exchange rate. So using supply and demand, we are looking at where price could be headed. We also, the hard part would be analyzing all the factors that affect supply and demand. In other words, you'd have to look at different factors to determine whose economy is rocking. So you have to understand the reason why and how certain events like an increase in the unemployment rate affect a country's economy. So the idea behind this type of analysis is if a country's current or future economic outlook is good, the currency should strengthen. So I'm going to show you a little bit of a fundamental analysis from my chart. So let me go to what is happening this week, tomorrow especially. So what happens every month, you have to gauge how many people are employed in a previous month. So let's have a look at this. So it's here. So on this calendar, or you can use this, you can also use investing. So let me for now use the Forex Factory. So a minute. So this is fundamental analysis. Whatever I'm showing you guys now, this is fundamental. Fundamental means we are able to forecast how many people are employed. So these are things that really affect the economy, and they'll affect how far the outlook of the economy will be. So give me a second. Yeah, it's open. So we also look at interest rates. So for example, this is from Monday 3rd. So there was a holiday. So, but here Fed chair was able to speak. So all you need to do is to look at this point. So you're able to see how this affects us. Minute. So this is RBA statement. There was also this. So this is what I wanted to measure on. This was yesterday. So of course you can see the employment change increased. So you usually just have to look at it this way. So let me show you guys how you analyze fundamental analysis. So minute. So this is employment rate. So guys, pay attention. Employment change. So you can see the previous was 0.6, forecast 0.3, and then you can see the actual came to 6.0. So that means this was good. No, this is for tomorrow. I'm looking at New Zealand. So this is on Wednesday. So this was yesterday around 1:45 a.m. So you can see previous negative 0.7%, forecast 0.1. So the actual came to 0.6%. So that is to mean basically the economy is improving on New Zealand, because you can see employment increased by 0.3%. You can see the forecast was 0.3, the actual was 0.6. So this is how you're able to see. So always have the economic data before you. So, and all you need to do is click on this point to be able to see the change of how many people are employed versus the change of the guys who are not employed. So you can see it's released quarterly about 35 days after the quarter ends. It's a change of the number in the number of employed people. So job creation is an important leading indicator of consumer spending, which accounts for a majority of overall economic activity. So this is the most important point. So if more people become employed, of course, the guys who had lost their jobs regain back their jobs. That means this is good for the economy. So this is number one. So let me show you also another one. This is employment rate. So now this is how many people are not employed. So all you need to do is click on this. So this is just one example I'm showing you on the jobs report. These ones, especially the first week of the month, they are usually very, very volatile. So look again, the forecast was 5.6, previous was 5.3. I hope guys you can see, but the actual came as 4.9. So that means it was lower. Can you see it was lower than the 5.6? That means at least unemployment rate is going down. That means this is good. So actual less than forecast is good for the currency. This is a percentage of total workforce that is unemployed and actively seeking employment during the previous quarter. So although it's generally viewed as a lagging indicator, the number of unemployed people is an important signal of overall economic health because consumer spending is highly correlated. So if you have more people who are employed, they have salary or they have good money in their pockets, that is to mean, of course, the spending power is high. So this calendar is usually on this site, forexfactory.com, or even in. So today, guys, I hope you're following. So today we are looking at the pound. So today is Thursday. So around 2 p.m. So in the next 3 hours, we'll be looking at the pound. So at the pound, of course, we are looking at the interest rates. They might hike, they might remain the same, or basically because of how the reopening and how the economy is getting back. So this is what we have in today at 2 p.m. So this is asset purchase facility. So what is it? Let's have a look at it. Okay, minute, guys. So you can see total value of money, the BOE. BOE is the Bank of England will create and use to purchase assets in the open market. So actual less than forecast is good for the currency. So this increases demand for bonds. So bonds, basically the assets the government buys every month, of course, to reduce or increase money circulation. So it increases, basically each member will vote the total amount of money to create for the program. The individual votes are published. So published 2 weeks later in the MPC meeting. Another word you'll hear is quantitative easing, or basically the bonds. So let's see how it affects the market. So this is BOE monetary policy report. So give me a minute. It's more hawkish than expected is good for the currency. It provides the BOE's projection for inflation and economic growth over the next 2 years. The BOE governor also holds a press conference to discuss the report's contents after release. In November 2019, source change report named from inflation to monetary. So we have two policies. We have monetary and policy, and fiscal policy. On monetary policy, we are looking at interest rates. They might be raised, they might be cut, they might remain the same. So fiscal policy, of course, we are looking at infrastructure development. We can look at the roads, we can look at electricity, we can look at so many things, but that's physical. Then, of course, there is the votes. So these guys are usually 9 of them. So you can see the last forecast, it remains the same. So today, 2 p.m. will be a big day for the pound. So if you're online, of course, and you're also following us on the WhatsApp, you could be making some really good return. So I was just explaining fundamental analysis, and at least I've showed you a little bit of what will be happening this week. So the idea is this type of analysis is that if a country's current or future economic outlook is good, its currency should strengthen. The better shape a country's economy is, the more foreign businesses and investors will invest in that country. So this results in the need to purchase that country's currency. So for example, in our country here, so I'm going to give you an example with our country, Kenya here. So if we are doing well economically, for example, we are big in tourism, we are big in coffee, we are big in pyrethrum exports and tea. Even tea, people, especially from all over the world, they really love our tea. So we are also good in creation of jobs. Service industry is starting to boom back. Services include maybe, let's say, internet services, data services, online services, e-portals, and so forth and so forth. So if the country is doing well, of course, more people will get employed. If more people get employed, they'll be spending. If they're spending, the country's currency will be gaining strength. So that's mostly what we are always looking at under fundamental. So this is a higher currency value against a lower currency value, good and bad economy. So higher interest rates will make dollar-denominated financial assets more attractive. As the economy gets better, raising interest rates may be needed to control growth so that the economy does not overheat. So as a result, the value of the US dollar will likely increase against other currencies with lesser demand. You know who the Fed chairman is. So this requires a good understanding of macroeconomics and geopolitics. So you don't need to be intimidated. All you need to know is that fundamental analysis is a way of analyzing potential moves of a currency through the strength and or weaknesses of that country's economic outlook. Of course, it's going to be awesome. So now let's look at the last one, and then I think we'll have to begin technical analysis on Tuesday, guys, so that at least I can give you time to read through, because now we'll be doing the hard part. I've been able to help you understand technical analysis is more of price action, studying historically where the price has been and being able to have a probability of where the price might be headed. So let me finish up with the sentiment analysis so that at least I can leave you guys ahead. So in sentiment analysis, used to gauge how other traders feel, whether it's about the overall currency market or about a particular currency pair. So earlier we said that price action should theoretically reflect all available market information. So unfortunately, it's not that easy. So Forex markets do not simply reflect all the information out there, because traders will all just act the same way. So a minute. So this is why sentiment analysis is important. Each trader has his or her own opinion of why the market is acting the way it's acting, and whether to trade in the same direction of the market or against it. So this is an example. For example, it's like Facebook, a complex network made up of individuals who I want to spam our newsfeed. Anyway, that's today. So each trader's, this is the point I wanted you to note on sentiment analysis. Each trader's thoughts and opinion are expressed through whatever position they take. So this is the most important point, thoughts and opinion. You have a thought of opinion of where you think the market is going to go. Someone else has a thought and opinion of where they think the market will go. So it helps form the overall sentiment of the market regardless of what information is out there. The problem is you cannot, no matter how strongly you feel, you can't move the market in your favor. So even if you believe the dollar is going to go up, but everyone else is bearish, there's nothing much you can do unless you're one of the G's, Soros or Goldman Sachs. So anyway, you have to decide if you want to, how you want to incorporate your perception. So we are looking at the perception of the market, your perception of market sentiment. So let's see what it's all about. So let's now see which analysis works better. Then we see how we combine the three of them so that you can be able to understand how this really works. So we'll be now dwelling into each, but mostly we'll be looking at technical and fundamental. For sentiment, I'm going to teach you how you read sentiment of the market. Sentiment is how's the market feeling. So let me show you, like on Monday. So there was a big sell-off that happened with futures. So let me show you futures and also on gold. So this is gold. So you can see on 1 hour chart. So this is the sell-off I'm talking about, guys. So can you see this? So this is Janet Yellen was talking about raising interest rates or something. So that small news alone, you can see how many people it moved the market. From here, it fell up to here. That was around 218 pips. So you see, this kind of moves are the one we are always looking. So you could have made a short. Then you can see there was something that looks like a W that formed, and now the market is going up. So me, I got my buy around this area, and now I'm holding at least. So I'm up running, say, let's see how much I'm running, say around 160, 174 pips. So this is alone, this is on gold alone, guys. So you can see right now we are at 1794. So if you had this week alone, you would have made this 100 and something pips and this 100 and something pips. So this only works practically if you are in the market. So this kind of move, of course, you could have made some very good nice pips or some very good nice. So which analysis is the best? So let's finish up, guys. Then on Tuesday we'll start with technical. So TA or technical analysis involves powering charts. So TA or technical analysis involves powering over charts to identify patterns. Then fundamental involves powering economic data reports and news headlines. What about sentiment? So fundamental doesn't matter. So this other guy says this doesn't matter. So fortunately, the three types of market analysis complement each other. So this means trends in price affect fundamentals just as fundamentals affect prices. So to recap, let's do a small recap. Technical analysis is the study of price movement on the charts. So all we are studying is the price movement, while fundamental analysis takes a look at how the country's economy is doing. So guys, give me a minute. Okay. So while fundamental analysis takes a look at how the country's economy is doing. So while sentiment determines whether the market is bullish or bearish. Bullish means, of course, the bulls. Bulls are guys who are pushing the price up. Bears are the guys who are pushing the price down. So when we say market is bullish, we're looking at the market going up. When the market is bearish, we're looking at the market coming down. So the most important factor today I wanted us to learn was the fundamentals. Whatever I've showed you on Forex Factory, the unemployment and employment reports are very important. Why? They shape the sentiment. So they shape this sentiment. So sentiment is this sentiment. So right now, this is sentiment means the market is moving up. The sentiment is the market is bullish. If the market is going down like here, the market is bearish. So that is what sentiment is all about. So those three, they work hand in hand. So for me, I'll be guiding you on how you apply the three analysis. So all the historical price action and economic figures are there. All you have to do is put on your thinking cap and put those analytical skills to the test. So what happens is you have to use the three of them. So where do we go on from here? So we have to apply all the three of them. So let me finalize by showing you minute, guys, what is happening tomorrow. So tomorrow is usually the biggest day for us traders. We really pay a lot of attention. So let me touch on the fundamentals of tomorrow. Then if you guys will be online, we can trade the news tomorrow. So this is the CAD employment change. So we are looking at have there been more jobs or have there been less jobs? So guys, give me a minute. Hey. Hello. Hi, Ebu, let me call you in a few. Kidogo tu. Aya. So let me finish up, guys. So I was talking about unemployment rate. So we are looking at if it will be higher. So if this value is lower, of course, it's good. Actual less than forecast is good for currency. So then we also have the non-farm payroll. So this is a change in the number of employed people during the previous month, excluding the farming industry. Farming, because it's affected by weather, it's very volatile. Crops go bad, others go well. So average hourly earnings, we are looking to see Biden is calling for a $15 per hour earnings increase. That means right now they're between $7.58 per hour. So if the companies are making more profit, they can pour back that into earnings for the employees. So this is what will be happening. So this will be a big day, 3:30 p.m. tomorrow. So guys, this is what we do. I want you at least to be online. At least I know most of you are already trading with us and you're doing some good work. So what I'll be doing every week, now on Tuesday, we'll do an outlook of how basically the economy has been faring. We'll also do an outlook of how tomorrow will be. So if you are online, of course, and you're live right now, you should be making some really good returns. So unless there's any more question, guys, I think I'm done for today. So today I was just introducing you the analysis. So I'm also tracking. You can see Euro USD has broken my trend line here. So now this technical bit is what we'll be doing. So guys, unless there is any other question, I think I'll end my training at that. Any question, guys? Any questions? Let me see. Any questions? So go read ahead on technical analysis. This is your assignment. Also read on candlestick